Today, I'll be analyzing and testing the popular day trading strategy using the SuperTrend Indicator. The basic trading plan consists of setup, trigger, and management. Setting up with SuperTrend is straightforward. We'll add 3 SuperTrend indicators to the chart, each with its own unique settings. When 2 or all 3 indicators activate, that's our cue to enter the trade. During the trade, which falls under the management phase, if our price target is met, we'll close the position. However, if one of the indicators shows a contrary signal, we'll need to reconsider our position. Before diving into the testing phase, let's briefly discuss how the SuperTrend Indicator functions. It's a trend-following indicator rooted in the average true range, ATR, of price data. The ATR gauges the volatility of a security's price. Once you've determined the TR values for each period, you can compute the ATR. Typically, the ATR is calculated using a moving average of the TR values, with the 14-period average being the most common method. To understand the ATR, picture monitoring the price of your favorite stock throughout the day. The price oscillates, and you're trying to gauge the intensity of its movements. This is where the true range comes into play. Firstly, consider the gap between today's peak and lowest prices. This offers insight into the day's price range. Occasionally, prices might surge or plummet overnight. So it's also crucial to see how much today's peak exceeds yesterday's close for a gap up, or how much today's low is beneath yesterday's close for a gap down. From these 3 movements, select the most significant. That gives you the day's true range. The SuperTrend indicator's value derives from the ATR. For an uptrend, it's the current close minus the ATR multiplied by a multiplier. The SuperTrend indicator offers buy and sell cues based on how the closing price relates to the SuperTrend line. In an uptrend, the SuperTrend line is green and sits below the closing price. The buy signal emerges when the closing price surpasses the SuperTrend line. With a smaller multiplier, like 1, buy signals are more frequent. But with a larger multiplier, like 3, a buy signal appears after sustained upward movement. For selling, it's the inverse of buying. Traders often employ the SuperTrend indicator to validate signals and sidestep false breakouts and reversals. Suppose you have another strategy signaling a buy, but if only one SuperTrend indicator activates, you might want to delay the trade until 2 or all 3 SuperTrend indicators are active. Now let's dive into the test section. Here are the settings for each SuperTrend indicator. For the first one, ATR period is 12 with a multiplier of 3. Turn off the buy and sell labels. For the second one, ATR period is 10 with a multiplier of 1. And the third one, ATR period is 11 with a multiplier of 2. I did a backtest day trading Apple stock. When trading stocks, I prefer to see 2 out of the 3 SuperTrend indicators activate. For crypto, all 3 indicators should activate. Here's a 5-minute chart from August 14th. Typically, I start trading after 10:30 a.m. I'd like to assess the day's movement from the opening bell until 10:30. By 10:30, I noticed a consistent upward trend. There were several strong green candles backed by volume. It seemed like a bullish day. I wouldn't go for naked calls here since the risk-reward ratio isn't favorable. If the price tips, the options value could plummet by 30 to 40%. Instead, I'd opt for an option strategy, which I'll detail in upcoming videos. Now, next day of August 15th. By 10:30, there was a clear downward trend. It seemed likely that the resistance would be tested either here or there. The price took a significant dip. The instinct might be to look for a reversal. By 11 o'clock, a prominent green candle appeared, and the buy signals were activated. This confirmed a potential bottom. However, it was quite close to the resistance. I thought about giving it a shot, hoping for a breakout since the bottom seemed confirmed. But the day ended at that low point. The outcome wouldn't be too harsh, especially if you avoided naked calls. On August 21st at 10:30, I noticed another downward trend. My first thought was to find a shorting opportunity, but the price seemed to stabilize, hinting at a double bottom here. The buy signals activated, supported by volume. I initiated a long position using an option strategy. In summary, the SuperTrend indicator helps curb impulsive decisions and sidestep false breakouts or reversals. For example, it's not wise to trade based on just one activated signal. SuperTrend Indicator offers a setup to begin your decision-making process. When two signals activate, you should start analyzing and deciding. If you're in a long position and you see two sell signals, you might want to reassess the situation. Ultimately, it validates your trading plan. For example, the signals confirmed a double bottom setup. If you enjoyed this video, please give it a like. And if you want to see more from me, hit that subscribe button. Your support means the world. Thanks.